Hi, Rick Van Wieren here from Remax Properties, and we're going to talk about the May real estate statistics here today. It's a beautiful week here in the first week in June, and we're into our summer weather pattern. May was a very good month. Sales overall were flat compared to last year. The median price was up 3.8% at $329,250. The average price jumped 4.6%, and we're up to $372 there. So prices are looking really good. We still don't have enough homes to sell. I mean, we were actually at about 1,900 homes for sale over the weekend, and it dropped as soon as all the homes that sold over the weekend got statused. So we definitely need more homes to sell. If you are a seller, a potential seller, want to get your house sold, this is a great time to do it because things are moving very quickly. The median days on market for the month of May were only 5. That's 5 days. Was half the homes that sold during the month of May were under contract in 5 days. So that's amazing. That's all I got for you today. Thanks so much for joining us. So some of our key indicators for our entire MLS area, first of all, the inventory just up slightly. We're still at a ridiculously low level of inventory with only 1.23 month supply. We just don't have enough homes for sale. May sales were down just slightly, pretty flat overall compared to last year. Again, result of this inventory being low. May prices did set new records. We set records last month. We set them again this month, so that continues to be the case. And both the average and the median were up. Although they slowed a little bit in terms of the percentage increase, we're comparing with we were setting records every month last year. So these are records on top of records. The sale price list price ratio 100.1. That means that people are paying more than the asking price in so many cases that we're actually getting more than list price. Median days on market 5. This is a very interesting number. So half the sales during the month of May were actually under contract in 5 days or less. When you consider that some of our homes we're putting them on the market and then holding offers and for a couple days to give people a chance to get in to see it, this would even be less. So very, very fast-paced market at the moment. And then pending sales, still very healthy numbers, and the pendings again are showing prices are going to continue to go up next month probably. We're going to drill down just a little bit. So for El Paso County only, you can see that we go from that 1.23 month supply down to a 1 month supply. And our inventory is actually down when you consider homes that are actually in the county. The May sales, most of them happen inside the county, and so that naturally follows suit, and the prices are mirroring kind of the rest of it. The sale price list price ratio, it was even higher for homes inside El Paso County. And then drilling down further into Colorado Springs itself, you can see now we're less than a 1 month supply for homes with a Colorado Springs mailing address. So very, very high rate of turnover here, and a lot of competition for homes. Some of the other key indicators that we like to look at, the unemployment rate here at 3.3% from the Bureau of Labor Statistics for April, which is the most current month. That is a great number. We did not believe these higher numbers back here, so I don't know if this is all improvement per se, but the numbers now reflect that what we think has been going on, and that is there are more jobs than people currently. So that's an awesome thing. Interest rates were back up a little bit at 4.2. That is a little bit higher than, 5.2, 4.2. We're up a little bit higher than some of the numbers we were seeing a few weeks ago. We were actually down as low as I think 4.06, but this is still a really, really healthy number here at the 4.2%. So, a quick summary on interest rates. We're seeing moderating forecasts, and the international situation have generally stalled increases to the interest rates. And trade disputes are creating some continued uncertainty, and that tends to be a drag on the economy overall, which keeps rates from going up too fast. New home permits, this is kind of new news here, but they're actually down 18.9%. The year started with permits down a little bit. It was believed that was mostly driven by code changes, but we've not really caught it up. And so we now are really seeing that new construction is not keeping pace with the shortage of inventory that we have to deal with. And then, as I mentioned a minute ago, the unemployment level seems to be extremely low, and that's awesome. So, bottom line is continued pent-up demand and household creation is putting continued pressure on the local supply of homes, and we're expecting prices to continue to rise at a rate of between 4 and 6% this year.